Ladies and gentlemen, welcome back to the channel. We are going to go over all of your Tesla stock breaking news today, and there's actually quite a bit of it, so yeah, buckle up for that. But we're also going to talk about what's happening in the markets today, okay? It's a bit of a weird day. Overall, I see signs of a continuing recovery in this market. There's one big thing that I'm going to point out today that is clear to see from my perspective that is giving signs of a larger rally to come for this market. Now, it is not an equally good day today. Some areas are doing good, some areas are doing bad, and the headlines are like the headline indexes kind of are a little confusing. For an example, small caps, Russell 2000 is up 1.5%. But not a lot of small caps are actually going up. It's a very concentrated move within small caps. And we'll talk about that in today's episode as well. We did get some economic data. We have some broader market news as well to go over. We have some earnings today in after hours. We'll get you caught up to speed. And Tesla stock right now, down almost 1% today. So ladies and gentlemen, before we get into all of this key information, hit that like button, subscribe to the channel, and check that link out down below in the description of today's episode if you guys want to come join the trading community and come invest alongside us, where we are going out to find the next big winners within AI stocks. And a lot of them just happen to be small caps because that's not where a lot of attention gets paid, especially during market volatility events like we have seen recently. So there's a lot of opportunities specifically right now that we are capitalizing on. That link is down below, but with that said, let's get started. So if we take a look at what's happening in the broader markets today, the Dow is up 0.83%, S&P 500 is up 0.25%, NASDAQ down 0.26%, and the Russell 2000 is up 1.5%. But it's a very concentrated move today. There's more declining stocks than advancing stocks, okay? Even within the Russell 2000, which on paper looks like the best index today. It's a little bit of a risk off move. Now, the big thing that I'm going to point out that looks good today, the VIX, while it's still elevated at 19.53, it is down almost 5% today, which inevitably will be a good thing for risk on stocks. Now, we're going to get into the data, some of the headlines in just a moment that might explain why these more risk-on areas of the markets are selling off today. And it's like day by day, sometimes good economic data is good for markets and good for risk-on. Sometimes it's bad for risk-on. We did get some economic data today. Now, the odds of a rate cut are going up again from about 73% yesterday to about 78% chance of a cut today. That's because we did get some weaker than expected economic data, okay? As I said prior to today, like yesterday I said this, the economic data really doesn't matter, a lot of it, because it's so delayed, okay? The data that we got today is from September. Now, one of the things you could point to is the ADP employment change on a weekly basis. That came in at negative 13.5 thousand. So we were negative 11,000. Then we were negative 2.5 thousand last week. And now we're negative 13.5 thousand. This is a weird one. Okay, markets 3 months ago would not have reacted at all to this data set. I don't even remember ever getting this data set. ADP employment change on a weekly basis, I don't recall ever discussing that. Okay? But it was a little weaker than some people would have liked. Okay? Because take 13,500 times 4, that's a run rate of about negative 54,000 jobs a month. That's a little bit too recessionary for markets liking. Okay, now how accurate is the data? Who knows? I don't see much of a change out there in the economy. Holiday shopping season is going well. AI is alive and well. Walmart told us there's not a lot changing out there. So while there's weakness potentially in certain sectors, I don't think we're headed for a recession. And I don't think Wall Street is believing of that. But again, it is enough to give you a bit of a risk off appetite in the markets. Maybe not enough to crash markets, but a little bit of a risk off kind of tone. Now, PPI month over month for September came in at 0.3%, in line with expectations. Retail sales month over month came in weaker than expected at positive 0.2% versus forecast of 0.4%. So it came in about 50% lower than expected. Again, adding to some of these economic concerns a little bit. Core PPI month over month for September came in at negative, or actually came in at 0.1%. The expectation was 0.2%, so that's better, right? PPI is producer price index, CPI is consumer price index. So PPI tends to lead CPI. If PPI goes up, then a couple months later, CPI tends to go up. If PPI goes down, a couple months later, CPI tends to go down. Now, the retail sales control group month over month was negative 0.1% versus expectations of positive 0.3%. So definitely good number there, but I think the economic concerns were a little stronger today than the slightly better than expected PPI data. Now, S&P Case-Shiller home price year over year came in at 1.4%, in line with expectations. Month over month came in at 0%, missing expectations of positive 0.3%. And then house price index year over year came in at 1.7%, missing expectations of, or beating expectations of 1.5%. We also got business inventories month over month. This is for August. It's so outdated here, but it came in at 0% versus expectations of 0.1%. CB consumer confidence came in for November. We were expecting around 93.4. You came in at 88.7. Okay, so that was a pretty bad number. Okay, it was the lowest consumer confidence reading since April. Like tariff, Liberation Day kind of numbers here, right? Back in April. That's also making people kind of nervous. Now, pending home sales month over month came in at 1.9%, better than the expected 0.5%. Pending home sales year over year came in at negative 0.4%, better than the expected negative 2.4%. Richmond Fed manufacturing came in at negative 15 versus the forecast of negative 1. Manufacturing shipments came in at negative 14 versus the expectation of positive 6. Richmond Fed services revenues came in at negative 4 versus expectations of positive 5. Dallas Fed Services Index came in a little bit better than expected at negative 2.3 versus the expected negative 6. So, story of the day today, weaker than expected economic data. That furthers the probability that we will get a rate cut. The Fed's blackout period is starting, okay? So, tomorrow, we're going to have a full day of trading. Okay, last year we had a half day of trading before Thanksgiving. Tomorrow we're going to have a full day of trading before Thanksgiving. And then markets are going to be closed on Thanksgiving on Thursday, and then it's a half day of trading on Friday. So you really have today, tomorrow, and a half day of trading on Friday. And that is it. You have like 1.5 days left of this week, and the week is over. And you're going to be in a Fed blackout period. And at this point, it's all but confirmed the Fed is going to be cutting rates on December 10th. So that's good. Like, you're not going to get whipsawed next week, in my opinion. There's just not going to be enough economic data to change the probabilities of a rate cut. And what we're seeing in the VIX today looks good as well. I don't think the economic data is enough today to start another round of recession concerns. Now, there was also a report out today that Meta may actually look into buying Google chips. And that would cost Nvidia $180 billion. Although this is not confirmed, again, it would still be AI investment. But besides it going to Nvidia, it would be going to Google. So I don't really understand, why you would see markets care about this news. It's AI investing, it's AI spend, no matter which way you want to put it. But Nvidia down 4% today is definitely putting some of that risk off appetite out there into markets. And if you invest in AI stocks, then you're feeling this pressure today. And you can see that here. It says Nvidia stock falls 4% on report that Meta will use Google AI chips. It says the information reported that Meta is considering using Google's tensor processing units in its data centers in 2027. It says companies building AI infrastructure have been searching for a more diversified supply of chips. Now, I don't believe this is actually going to happen because it's the other things that make Nvidia have such a strong moat, like the software stack that comes with it, right? And I don't know of the software stack that Google has for their chips, but it's not going to compete with Nvidia. Nvidia has NVLink and all of the things that make data centers work, right? If you just put 400 chips together in a warehouse, it is very difficult to get them to work together, okay? You can buy the chips, but getting them to work together, as someone like Elon Musk has said before, is a very difficult thing to do. And Nvidia makes that happen. That is part of the software stack of Nvidia, and that's why Nvidia has such a strong moat. So even though I wouldn't care personally where the spend is, as long as companies are spending, I don't believe this. Also in the news today, Ukraine reportedly agrees to the U.S. brokered peace proposal. Nvidia today name checks Michael Burry in a secret memo pushing back on AI bubble allegations. It says here, Nvidia emailed a memo to Wall Street sell-side analysts to push back on my arguments on SBC and depreciation. I stand by my analysis, Burry said in a post on Substack referring to stock-based compensation. I am not claiming Nvidia is Enron, it is clearly Cisco. Burry has repeatedly warned that today's AI infrastructure frenzy mirrors the late 1990s telecom build-out far more than the dot-com wipeouts investors remember. Let's face it, Michael Burry is not wrong, okay? Eventually, there will be some kind of crisis in AI. Does it resemble the dot-com era where only a few handful of companies survived and are actually around today? Probably not, right? It's probably not going to be that extreme. The use cases are more prevalent today for AI than it was back in the day with the internet. Companies are not going into crazy amounts of debt to finance AI. A lot of it is financed through free cash flow. There's a lot of differences between the dot-com era, but inevitably one day there will be a crisis. It's like if I said here today, stocks are going to crash 50%. Okay, great. At some point in our lifetime, that will probably happen. But does it happen 6 months from now, or does it happen 60 years from now? It's the timeline that matters. And if you're not going to have AI blowing up for 3 to 5 more years, and I don't mean blowing up as if it's just a bubble and you lose all of your money, but having a real problem in AI, like AI goes sentient or something. Like if that's a decade away, half a decade away, does it really matter what Burry is saying today? That's the argument that I would make, that Nvidia is not at risk in the near term, the next couple of years, of dealing with Cisco-like issues, in my opinion. I mean, they have a $500 billion worth of a back order, Now, you gotta love Wall Street here. This is a CNBC Pro article. I am not a part of this, so it doesn't look like I can read it. But it says here, S&P 500 entering a corrective phase that could take it down 8 to 10%, says Raymond James. Isn't that awesome? You say that after the S&P already fell, what, 5% from the highs? The S&P already fell from your prior highs 5.64%. Yeah, that doesn't do anything to come out now and say that we're entering a corrective phase. Now, White House senior advisor Kevin Hassett is emerging as the top pick as the Fed chair search nears its end, according to people familiar. Zelensky says Ukraine is ready to move forward with peace deal framework with Trump and Europe. We have on X a little bit of a rundown of what Raymond James says about the S&P. Raymond James warns that the S&P 500 may drop 8 to 10% over the next 3 months. November's losses, S&P and Dow down 2%, Nasdaq over 4%, reflect weakness in tech and overall market breadth. Javed Merz, the firm's technical strategist, says technical sell signals and poor market internals indicate a intermediate term correction. Portfolio managers are reducing risk, favoring staples and value, while any short-term bounce is expected to stall near the 50-day moving average. Mirza views the pullback as a potential buying opportunity in tech, industrials, and basic materials. So really from the low, you'd only be looking at about a 2.5% decline. So it sounds very misleading. Bank of America says today that TPUs intensify competition, but buy Nvidia, AMD, and Broadcom. Bank of America sees 5 tailwinds for the U.S. economy in 2026. Bank of America expects 2026 U.S. growth of 2.4%, supported by 5 key tailwinds. Big Beautiful Bill stimulus adds 0.3 to 0.4 percentage points to GDP via consumer and CapEx support. Fed cuts with lagged effects that will likely boost activity in the second half of 2026. Trade policy expected to be more growth-friendly, regardless of tariff rulings. AI investment continues to support economic activity, with base effects from prior shutdowns to mechanically lift GDP. It says here the Conference Board, consumers' average 12-month inflation expectations remain elevated in November, and the median rate increased to 4.8%. Alibaba CEO said today that an AI bubble is unlikely within the next 3 years. Bessent said today the next Fed chair needs to, quote, simplify things. Bessent said on CNBC today that President Donald Trump may choose the next Federal Reserve chair before Christmas. Bessent is finishing interviews with the 5 candidates to replace Jerome Powell. He said the Fed has become overly complex under its current ample reserve system and needs to return to a simpler, more traditional role. We've got to simplify things, he said. Alibaba today says for the next 3 years, AI resources overall will be in a state of short supply. Bessent says that we need to maintain U.S. leadership on AI. Bessent said today on U.S. and China says, quote, we're always going to be natural rivals. Bessent on the U.S. and China relationship is in a good place. Now, Nvidia said today, quote, we're delighted by Google's success. They've made great advancements in AI, and we continue to supply to Google. Nvidia is a generation ahead of the industry. It's the only platform that runs every AI model and does it everywhere computing is done. Nvidia offers greater performance, versatility, and fungibility than ASICs, which are designed for specific AI frameworks or functions. And again, this is like I said earlier, I don't believe that Meta is going to stop buying Nvidia chips. That just, to me, doesn't make sense. Now, we are going to have some earnings today in after hours with Dell, CleanSpark, Workday, Nutanix, Zscaler, Autodesk, Ambarella, PagerDuty, Urban Outfitters, and NetApp. And then tomorrow morning, we will have earnings from Li Auto and John Deere. So, Dell could be kind of important for markets, right? What does Dell say about AI? What does John Deere say about, the industrial economy? So things to watch, but it's not like it's going to crash or most likely not rally the markets. Now, if we take a look at the CNN Fear and Greed Index today, yesterday you closed at 13. Today you're at 14. So, you're still at, very bearish levels on all of your sentiment indicators in this market. And I think Wall Street is just really underweight this market right now. And I think we're going to have an end of the year chase because Wall Street needs to get allocated to stocks again. They're underperforming the S&P. 80% of them historically underperform. And this is why you see an end of the year chase to really narrow that underperformance gap, because if you're only up, let's say 7% right now, and the NASDAQ or S&P are up 12, 14% year to date, something like that, you're going to lose clients, right? You're going to lose pension funds. You're going to start losing money. So what do? You have to get back into markets. You have to chase markets into year end. And that is where I think we're set up just because of how underpositioned Wall Street is. Okay, market momentum is fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear. Market volatility is neutral, safe haven demand, extreme fear, junk bond demand in extreme fear as well. Again, we had an AI investor sentiment survey that came out last Thursday. Markets are going to be closed this Thursday. So do we get that tomorrow, or do we get a new survey on Friday? I'm not exactly sure. It might come out on Thursday still. I guess we'll see. But the last one we had was 32.6% of investors are bullish, 23.9% are neutral, and bearish investors at 43.6%. So there's a lot of bears out there, okay? Historically, there's like 6% more bulls than bears. There's 12% more bears than bulls right now. So you're like, what, 18%, underweight historically on the bull side versus the bear side. That's about as bad as it gets, unless you're in a full-blown crash. Now, the percent of stocks trading above their 50-day moving average improving a lot today, up to 45.6%. Almost 7% of stocks are breaking above their 50-day moving average. But again, this is going to come in waves. Today, you're seeing more of the staples and value and those kind of names that are outperforming. Some of the AI hypergrowth underperforming today. Wouldn't surprise me if tomorrow there's a flip-flop and the hypergrowth outperforms and the staples and value underperform. Now, Tesla stock at the time of recording this video is up 0.15%, so marginally up on the day as of right now. It does look like things are getting better into the end of the day today, so we'll see where the final numbers are. But again, I believe we're headed for an end of the year rally. There's no other way to put it. And I think Tesla is going to be one of the biggest stocks to benefit from that. Yesterday, Melius research analyst Bob Wertheimer had some very positive things to say about Tesla. He said Tesla's autonomous driving lead is approaching an irreversible tipping point that could trigger one of the biggest value shifts in modern industrial history. Tesla is a must-own because the world is about to change dramatically. He says our point is not that Tesla is at risk, it's that everyone else is. He added that the next 5 years will see hundreds of billions in value shift to Tesla. Public awareness remains low. Not even 1 out of 100 Americans have ridden in a self-driving car, Wertheimer stated, adding that only tens of thousands have tried Tesla's latest FSD supervised system. When widespread rollout arrives, it will still shock most people, which is one of the most bullish endorsements I've seen for Tesla in a long time, calling the stock a literal must-own. And this was yesterday. Today, Tesla has released its Mezcal in Europe for 349 euros. The bottle was designed by Tesla's director of product design, Javier Verdura, in honor of his Mexican roots and early life growing up in Mexico City. Elon Musk says that legacy automakers have not shown any real interest in licensing Tesla's FSD. He says, quote, when Legacy Auto does occasionally reach out, they tepidly discuss implementing FSD for a tiny program in 5 years with unworkable requirements for Tesla. So pointless. Now, Tesla has completed Nevada's self-certification process for its RoboTaxi. Sawyer Merritt says, I just confirmed with Nevada's DMV that Tesla can now deploy and operate autonomous vehicles on public roads in the state. Tesla still needs approval from the Nevada Transportation Authority to operate a commercial robotaxi ride-hailing service. The company will likely apply for that permit soon. Once Tesla receives that final approval, it will then be able to launch a paid robotaxi service for the public. So again, this is Nevada. This is really Las Vegas, right? But this is happening in many cities all at the same time right now. The Tesla North America X account shared this post here and says, new at the Tesla diner, and it looks like a little bit of pumpkin pie and a pumpkin milkshake. Maybe I'm just hungry, but that looks good. Now, Tesla is hosting a holiday celebration party at select showrooms across the U.S. where they will be giving FSD supervised demo drives. They say, quote, bring along your whole family to enjoy hot cocoa and festive activities, including FSD supervised demo drives, limited edition Tesla toy giveaways, and more. We'll also be accepting food and toy donations to benefit Toys for Tots and a local food drive. Now, Tesla is adding a new prompt in their RoboTaxi app requesting user consent for enhanced in-cabin data sharing. This prompt in-screen specifically targets two key areas of data collection designed to improve the vehicle's autonomous capabilities and support features. Tesla says, quote, analytics are anonymous. In-cabin data isn't linked to you unless needed for a safety event or support request. It says here, for the first time after over a decade, Tesla appears ready to remove the beta safety blanket from its core autopilot features. And you can now choose to exclude home when cabin overheat protection or no AC is enabled on your Tesla. Also in the news, Tesla Sweden faces fresh union blockade at Gothenburg paint shop. Trade union IF Metal's latest notice ordered a full work stoppage for all Tesla-related activity. Paint jobs on Tesla-owned vehicles, factory warranty repairs, and more are now frozen. Rivian CEO RJ Scaringe on the loss of the US EV credit says, quote, I would say in the medium to long term it actually simplifies things for Rivian, narrowly and myopically. Through the lens of Rivian, it actually creates less competition. You're going to see a lot of manufacturers step back pretty aggressively from electrification, and we've seen that already happening. Gary Black responds to Elon Musk, where, again, Elon Musk said that he's tried to offer Tesla's FSD licensing to legacy auto companies. Gary Black shares this and says, I've argued this for years. Legacy Auto will allow its EVs to be charged at Tesla superchargers, but would never allow Tesla to take control of their full self-driving capabilities. EVs and unsupervised autonomy are table stakes for remaining in the automotive business. Every manufacturer will develop their own EV and autonomous capabilities. The problem is, it's very difficult to do. It takes a long time and a lot of money to do it. And that's even if you can do it. Like, is GM or Ford or some of these companies really going to be able to attract some of the top talent needed to develop full self-driving? That's going to be hard. It's hard enough to get people to work, at your local restaurant, let alone somebody good enough to create a self-driving program. It seems far-fetched to me that GM, Ford, Stellantis, any of your other auto companies will be able to attract the talent to actually get the job done without it taking 10 to 20 years. In option activity today for Tesla, you have 76 different trades from hedge funds and institutions, totaling $133 million with a positive order value of 83%. So it's very positive today, kind of on the slower side. It's the holiday season, okay? You tend to have volumes that kind of dry up around this time of the year. You tend to have lower volume. You tend to have less sellers and more buying volume, right? Just the normal buying volume that comes into markets. People have likely already tax loss harvested this year. They've probably already, done all of that. So you get lower volume typically, and this rally in the last 12 weeks, 10 weeks of the year, the markets tend to go up over 4%. You've fallen thus far. So if history repeats itself, as it typically doesn't, but it normally rhymes, you're in for a pretty strong next 5 or 6 weeks. Now, short sellers today are covering about 2 million shares of Tesla. Short interest is actually falling quite a bit. The live estimate is 73 million shares sold short. The last estimate we had here, updated as of Tuesday's close, was about 78, almost 79 million shares sold short. So it looks like quite a few million shares have been covered in the last 48 hours or so. And it looks like about 2 million today alone. So while there is still estimated 73 million shares sold short, and there's a lot of potential buying pressure to come in as short sellers cover on short positions, I do think Tesla is set up for a very strong next 5 or 6 weeks. Once you break above your 50-day moving average at about $435 per share, that is also where your 20-day moving average is. I don't know why it's not coming up on the charts now, but we can go ahead and pull it up here. They're pretty well converged on each other, about $435 per share. You break above that, and I think you're looking at an aggressive upside move for Tesla. With that said, let me know your thoughts on this down below in the comment section. We do have some economic data coming out tomorrow that could move markets. Keep in mind, tomorrow is a normal day of trading. Thursday markets are closed, and Friday's a half day. Last year, you had the half day the day before Thanksgiving. Markets were closed, obviously, on Thanksgiving, and then you had a full day on Friday. So it's backwards this year, but tomorrow, full day of trading, business as usual. So we will have another update coming out at 8 p.m. to get you caught up to speed on everything you need to know for tomorrow, and what I believe is likely to be this is the starting process for an end-of-the-year rally for markets and for Tesla stock specifically. Hit that like button, subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you want to come join the trading community. With that said, have a great rest of your day, and I will see you in the next one.